What's up, crypto fam, and welcome back to the channel. Today, we're diving deep into the altcoin and DeFi markets, unpacking the latest data, trends, and opportunities that you need to know about. The crypto space moves at lightning speed, so let's get right into the numbers and see what they're telling us. First up, let's take a look at the overall altcoin market capitalization, excluding Bitcoin. We're seeing some interesting consolidation patterns this week. After the recent rally, the total altcoin market cap is hovering around the key psychological level of $1.2 trillion. This is a critical zone to watch. A strong bounce from here could signal another leg up, while a break below might indicate a deeper correction is on the horizon. Volume has been steady but not explosive, suggesting that traders are cautiously waiting for a clear signal before making their next big move. Now let's zoom in on some of the top-performing sectors. This week, the spotlight has been firmly on Layer 2 solutions. Projects like Arbitrum, Optimism, and Polygon have all seen significant inflows and increased on-chain activity. Looking at the data from DeFiLlama, the total value locked, or TVL, in these Layer 2 networks has grown by over 15% in the last 7 days alone. This isn't just speculative money, it's being put to work. Transaction counts are soaring, and the number of unique active wallets is hitting new all-time highs. This tells us that user adoption is real and growing. People are flocking to Layer 2s for their lower fees and faster transaction speeds, which is a fundamentally bullish sign for the entire ecosystem built on top of them. Another sector that's been making waves is liquid staking. As we get closer to major network upgrades across different blockchains, the demand for liquid staking derivatives, or LSDs, is surging. Projects in this space are seeing their TVL climb steadily. Why is this important? Liquid staking allows users to earn staking rewards without locking up their capital, freeing it up to be used elsewhere in DeFi. This capital efficiency is a game changer. It increases liquidity across the board and creates a more dynamic and interconnected DeFi landscape. Keep a close eye on the leading liquid staking protocols. Their growth is often a leading indicator of broader market health and investor confidence. Of course, we can't talk about altcoins without mentioning meme coins. They've been on an absolute tear recently, with some showing triple-digit gains in a matter of days. While the hype can be exciting, it's crucial to approach this sector with caution. The trading volume is massive, but so is the volatility. Looking at on-chain data, we can see that whale activity is very high, with large wallets moving in and out of positions rapidly. This can lead to massive price swings. If you're trading meme coins, be sure to use stop losses and only invest what you're truly willing to lose. It's a high-risk, high-reward game, and the data shows it's not for the faint of heart. Let's pivot to the broader DeFi market now. The total value locked across all of DeFi is sitting at a healthy level, showing resilience despite some market chop. One key metric I'm watching is the stablecoin supply. The total market cap of major stablecoins like USDT and USDC has been slowly but surely ticking upwards. This is a positive sign. An increasing stablecoin supply means that new capital is entering the crypto ecosystem, sitting on the sidelines, ready to be deployed into assets like Bitcoin, Ethereum, and of course our favorite altcoins. It's like dry powder waiting for the right moment to ignite the market. Now, let's dig into some specific on-chain metrics for a couple of interesting projects. Let's take a look at a popular decentralized exchange, or DEX. We're seeing a fascinating trend in their trading volume composition. A few months ago, the majority of volume was concentrated in blue-chip pairs like ETH USDC. Today, we're seeing a much more diverse distribution, with long-tail altcoins and newly launched tokens accounting for a growing share of the volume. This suggests a rising appetite for risk and a willingness from traders to explore beyond the established names. It's a sign of a maturing market where users are getting more sophisticated and are actively hunting for alpha in more obscure corners of DeFi. Another interesting data point comes from the blockchain gaming and NFT sector. While the NFT market hasn't returned to its bull run highs, we are seeing a steady increase in unique buyers and sellers. The wash trading activity that plagued the market in the past seems to be decreasing, and genuine user engagement is on the rise. In-game asset trading volumes on platforms like Immutable X and Ronin are climbing. This indicates a shift from purely speculative flipping to actual utility and enjoyment. People are playing the games and trading the assets they need to play. This is the foundation for sustainable, long-term growth in the GameFi space. It's less about the floor price of a JPEG and more about the value of a digital economy. Let's also touch on derivatives. The open interest in perpetual futures for many top altcoins has reached levels not seen in months. High open interest can be a double-edged sword. On one hand, it shows strong interest and conviction from traders. On the other, it can lead to increased volatility, as it creates a large pool of potential liquidations. Looking at the funding rates can give us a clue about market sentiment. Right now, funding rates are generally positive but not excessively high. This suggests that while traders are bullish, the market isn't overly leveraged or euphoric yet, which leaves room for further upside before we see a major long squeeze. So, what's the big picture takeaway from all this data? The altcoin and DeFi markets are in a fascinating state of flux. We're seeing clear signs of user adoption and ecosystem growth, particularly in Layer 2s and liquid staking. There's fresh capital entering the space, indicated by the rising stablecoin supply. While pockets of the market, like meme coins, are showing signs of speculative froth, the broader sentiment, as seen in funding rates, appears to be cautiously optimistic rather than irrationally exuberant. The key is to follow the data, not the hype. Look at where the TVL is flowing, where the transaction counts are rising, and where the active wallets are growing. These are the indicators of real fundamental strength. As we move forward, the metrics to watch will be the altcoin market cap's reaction to its current support level, the continued growth of TVL in key sectors, and the flow of stablecoins. These data points will give us the best clues as to where the market is headed next. Remember, in crypto, information is power, and the blockchain provides a transparent ledger of everything that's happening. Learning to read that ledger is your biggest edge. That's our deep dive for today, everyone. I hope this data-driven breakdown gives you a clearer picture of the altcoin and DeFi landscape. The market is always moving, and we'll be here to track it with you every step of the way. If you found this analysis helpful, do me a huge favor and hit that like button. And if you're not already, make sure you subscribe and turn on notifications so you don't miss our daily data dives. Let me know in the comments which altcoin or DeFi sector you're most excited about right now. Thanks for watching, and I'll see you in the next video.